let's take a look at Nigerian Breweries' results there. Strong results, mostly in line with expectations. Now, just drilling into the numbers, most are expecting strong volumes growth going forward to offset the margin pressure that we're seeing. Is this your expectation?
Yes, Samantha. Our expectation is that Nigerian Breweries will continue to grow its volume. We've seen a volume growth of 24% year on year in their half year, and we also noticed that the profit after tax increased by 18%. The result is largely in line with our expectation. Our expectation for the year for Nigerian Breweries is that they would grow their top line by around about 20%, and the bottom line should grow by around 16%. So this result is largely in line with our expectation. We also see that they are having challenges managing their input cost as a result of the rising commodity prices, but I think so far this year they've been able to keep that within limit, and the guidance from Heineken is that they're going to maintain their input cost within single digits level of increase. And so our expectation going into the second half of the year for Nigerian Breweries is that they will continue to be able to maintain the high volume growth, and that the stock remains attractively priced.
Now, if you look at those input costs, as you say, barley prices are up 44% above June 2010 levels. The likes of SABMiller is becoming an increasingly interesting play in the Nigerian space there, given the potential that they see in operating there. They haven't been able to tap into the market yet, but they're looking to incentivize farmers in order to get raw materials at cheaper prices. Is this something that Nigerian Breweries is also looking into?
Yes, I think so. I think so. That's part of the reason why they have been able to maintain those input prices within the limits that we have seen, because in reality the commodity prices have risen faster than the way it has affected their books. And for the movement of SABMiller into Nigeria, we think is a positive development. Currently, what we see in the brewery sector is that is a two-horse race split between Nigerian Breweries and Guinness that both control about 80% of the market. So for SABMiller to actually move into the market will mean we have a third big player in that sector, and it will certainly improve competition. It will improve product offerings to consumers as well. And we think that the demographics of Nigeria, with a population of over 152 million people, with average age of 18 years, certainly supports that kind of growth in that sector.
SABMiller's Q1 trading update yesterday, strong volume growth in Africa of 15% overall. East Africa has got a good foothold there, but as you say, it still hasn't quite been able to tap into Nigeria yet. At what point in time is it going to start taking away market share and really capitalizing on the acquisitions that it's made to date?
I think they would continue to push to find the right entry strategy that would meet with their own business structure. And like you rightly pointed out, I mean, the real contributor to the driver of their volume growth so far this year has been contribution from Africa, that has contributed about 15% compared to the likes of Asia with just 11% contribution, and Europe with around about 6% contribution. So I think that Africa is a core focus for SABMiller, and I think that they would continue to push to find the right entry strategy into Nigeria, which would certainly boost their own earnings overall. But as to when that will happen, I think we just have to wait and see.
Right, let's take a look at those stock valuations though, because analysts saying that the breweries are too expensive at this stage. Some are downgrading the stocks. Looking at Nigerian Breweries sitting at 90 naira, it's rallied over 16% this year. Guinness is sitting at 230.85 naira, rallying over 15% this year. What are your thoughts on whether you should be holding these stocks given the earnings potential, or is it time to take some profits?
I think broadly speaking, from our own investment strategy point of view, we have like a hold strategy on Nigerian Breweries and Guinness. And the fact that analysts have downgraded the stock is not really surprising, because if you look at the brewery sector, both Nigerian Breweries and Guinness have appreciated by over 20% this year already. And if you compare that to the other stocks in the market, I mean, in the banking sector, there is almost no stock that has recorded positive appreciation on a year-to-date basis, and the market as a whole is just generally soft. And also what you find is that investors are actually reducing their exposure in the banking sector, for example, and moving it into the brewery sector, where they see the likes of Nigerian Breweries and Guinness as defensive stocks. And so because of the increased volatility in the market right now, those stocks are serving as a safe haven for investors. And that's why, despite the fact that analysts think that the stocks are already fully priced at these levels, the prices have remained flat over the last 1 month, and we don't really think that will change going forward, except there is a broad-based rally in the market.
Let's look at those banking sector stocks. They haven't really responded to some of the strong earnings results that have filtered through from the likes of EcoBank, Sky and Zenith. Is there anything that you've taken out of these results so far?
I think from our own perspective, the results have generally been in line with expectation, from Zenith Bank to Sky Bank to UBA. Generally, all those results have been positive. We haven't seen any disappointment so far, and we do not expect any right now. But like you rightly said, investors are not responding to those results right now, because I think it was just yesterday that we saw a little rally in UBA that appreciated by 4.8%. Skybank, on the other hand, appreciated by 2.7%, and Zenith Bank lost 0.4%. Across the banking sector, really, I think investors are not focusing on the company specifics right now. Rather, the focus is on just the broad risk in the sector regarding the banks that have been rescued, how all of the M&A activities would be resolved, how CBN will plug those holes, how eventually those mergers would begin to deliver results, and when will they begin to deliver results. So generally there's just apathy towards the banking sector right now, and that's why the results so far have not made any positive impact on the prices of the stocks.